Do you own a bond that trades dirty? Maybe you don't even know what that means. Hi, I'm Marilyn Cohen, president of Envision Capital Management in Los Angeles, and our expertise is managing bond portfolios. I've written a lot of articles, both in my Forbes columns and Forbes.coms, about bonds that trade with moving parts. Bonds that trade based on the Consumer Price Index, CPI, bonds that will trade as a percentage of treasuries, etc., etc. But a lot of people don't know the nuances of bonds. And that's why I am bringing to you today another bond boot camp series. And this is a little bit of an unusual one because there are some nuances in some of these bonds that trade with moving parts. When a bond trades dirty, that simply means that it trades without accrued interest. And just a little primer, accrued interest is the interest that accrues to the seller between coupon dates of which the buyer has to pay out, because on the coupon date you're going to get the whole thing. That's the short version. So lo and behold, when you buy a bond that is based on a percentage of the treasury bond, particularly the 10-year treasury bond, many of those bonds trade dirty. They trade without accrued interest. So if you're a buyer, whoopee, because you don't have to pay any accrued interest, it gives you more money to deploy elsewhere. If you are a seller and you sell in between coupon payment dates, ooh, woe is you, because you're not going to receive any interest. That's why it's imperative for you to look at your confirmations when you buy, your statements when you get them. I would say most people don't scrutinize their confirmations. I would say most people don't even look at their statements. So this is really an important feature, particularly if you're going to add a lot of moving parts into your bond portfolio, which, considering where we are now in the interest rate environment, a lot of individual investors like yourselves are looking at adding these types of moving parts. It's prudent. It's really smart. You should have some CPI floaters. You should have some bonds that will pay a percentage of treasuries. You should have probably some step-up bonds. But the topic today is bonds that trade dirty. Make sure you know what that means. Make sure if you own them and are deciding to sell them, you sell them on coupon payment day so you can receive all of it. I'm Marilyn Cohen, and thanks for joining me.